All right, so good evening, everyone, once again, and you are welcome. So basically, what's weekly outlook? Weekly outlook is just what we do to give us a little bit of perspective on what to expect as we step into the coming week for trading. At least we all know that basically what we are often here to do is to be able to um, speculate. I wanted to use the word predict, but predict is not something I think we use often in this industry. So mostly we speculate. So to speculate that okay, in this new week, all things being equal, this is what we are looking at. So I would look at majorly for now. I trade EU, Euro USD, and then I just check. I check oftentimes Cardano, and that's because I'm heavily invested on Cardano, so I just check the charts every day. So we'll check for those two, and then I've not seen any broker that affords one the ability to trade crypto with very good spread. So that's why I don't trade crypto on maybe MT4 or MT5 or something. Okay, so Euro USD, basically trading is simple, and when we say simple, I mean I'm speaking from the perspective of if there's a guideline that can keep us, then let's just follow it. And for us over here, it's just simple. We always keep it simple with structure or trend. Sorry, please. Um, I believe that this music is not loud, not louder than my voice, almost not loud at all. So structure, stroke trend. What else? Range. What else? Most likely, let's say the next can be liquidity, and then banks or entry. So basically, these four things just guide us. So what's a structure? Structure is king in markets. There's nothing you want to trade in this market, whether it is smart money concepts, whether it is ICT concepts, whether it is support and resistance, whatever you're trading. Except if there's a new model out there, you have to follow structure. And I'm assuming that we all know how structure moves in series of higher highs and higher lows. So we want to confirm the structure. And since we are entering into a new week, it is chill to use the weekly time frame to confirm our structure. Because ideally, as an individual, once we get into the week, actually the only time frame I mostly use is daily and 4 hour. That's one of the things I actually do to keep it very simple for me. Because the honest truth is there's if you like combine all the time frames in the whole world, you go still chop loss. And as for me, I realized that consulting more than two time frames for trend direction, maybe for the day or whatever I want to do, usually end up in confusion for me. So I just stick to daily and 4 hours. I only often mostly check the weekly in the beginning of the week. But the moment we enter into Monday, Tuesday, Wednesday, I stick mostly to the daily and then to the 4 hour for trend direction. I never go less than 4 hours. However, looking at everything right now from the weekly time frame, I would also chip in some things that maybe got me confused from the very beginning. You see, as far as this trade is concerned, if you go and check maybe from a monthly time frame, yeah, you can see that we are clearly in a downtrend here. But the fact is that before the monthly we begin to sell, the weekly we have to break structure to the downside. So until the weekly breaks structure to the downside, facts is that we are what? We are bullish. So it's confirmed, structure or trend, we are bullish. Meaning that entering into this new week, all things being equal, the only thing we should be looking for should be what? Buying opportunity. So we've confirmed our structural trend. What's range? Range is where we are looking to buy. Like points that we can say that, oh, if the market should go beyond this place, our buy setup is no longer valid again. And in this situation, where is our range? The fact is that this will be our down range and this will be our top range. Now, in this situation now, two things are bound to happen. That's one thing also we must not be ignorant of, because we don't approach the market with a very stereotypic mindset. And what do I mean by that? Even though the market is in a buying environment, that does not mean that we will not see some sells. And the fact is that we don't know. And those sells in a buying environment are for retracements. When you see a sell in a buying environment, it doesn't in any way means that the market has shifted to a downtrend or bearish structure. How do I put this now? Retracements on higher time frames, when you check them on a lower time frame now, they may sound almost like a new trend on their own. So what I'm just trying to chip in is that this is a weekly time frame. A weekly time frame is heavy, super heavy. So a retracement on a weekly time frame, trust me, may look like a new trend entirely on the 4 hour. So the fact that I initially said that we've confirmed that we are bullish and all we want to look for are buying opportunities does not mean that if we see the opportunity to catch a sell, we won't take it in a very detailed manner. What do I mean by that? This is a weekly time frame. Look at it now. The market has expanded. These are 4 consecutive up candles. 1, 2, 3, 4. And knowing the nature of the market cannot continue to go up. It will have to pause, retrace for a while, and then go back up. So what I'm saying is that while our primary structure for the week is bullish, we are also not shutting our mind to the fact that this week might be the week of retracement. So if you get the opportunity to join the retracement, take note of my choice of word. I'm not saying it's a must we join. If we get the opportunity to join it, we join it. So we join it down, and then remember I spoke about banks and entry, meaning that even if you want to continue to buy to the upside, what are the tangible places that we can look at? And I believe this is not confusing to anyone in that way. So we've confirmed the structure, the trend, the range. Now, what is liquidity? And the first thing to know about liquidity and why liquidity is important is that the honest truth is that the markets will never move. This is a statement. There are so many things you can't be confident of in the market, but this is one statement I can bet my life on. That the markets will never move towards any direction, to the upside or to the downside, without taking liquidity. And liquidity can be found in form of, excuse me, previous highs, previous low, open and close price, but it's mostly previous highs and previous low. Now, in this context, what are the liquidity points we can see? The closest liquidity points we can see is the previous week low. So we can just take note of that. My charts will not always be this label, but we are just doing this for the sake of having an outlook. So meaning that all things being equal, to continue to join the buy, we may most likely expect a retracement that will sweep this low. But when you also look below that low, you actually observe that what we have there is an imbalance. An imbalance is a form of support or resistance, depending on the trend it is forming. And then when you look at it in a way, as for me, I don't have issues trading support and resistance. What I have issues with is when you trade it without what's the name? Without let me use the word caution. So if you look at all this region now, what you observe is that it's like there's a form of how best can I put this? There's a form of, initially it acted as support here. If you look at this point, it acted as support, pushed price up the first time, pushed price up the second time, market broke it, pushed price back the third time, pushed price down again, pushed price down, pushed price down, and the market even came close this time around, retraced a bit, before it eventually broke above it massively. Yeah, someone is saying imbalance or breakout block. Yeah, you are correct. The reason why I'm not using the word breakout block is because breakout block has a definition in a way, meaning that a breakout block is an order block that's failed. And in this context, this place might not necessarily be an order block anymore, simply because right from beneath here, we have a new. I mustn't switch this place. Hold on, guys. Beginning from down here, we have a new trend entirely. So since there's a new trend entirely, we can't say that this is another block that should hold for sales. I don't know if that makes sense to you. So we have an imbalance here that also overlaps with both support, like support turn resistance, and non-resistance that we are thinking can turn supports. Now we have our liquidity here. So banks or entry, the example of banks is this imbalance, and then this, maybe support or resistance that is here. So basically meaning that going into this new week on Euro USD, what should we be looking for? Before we confidently conclude, let us look to the daily time frame. Now this is the daily time frame. Daily time frame closed bearish in a way. If you check it, this thing doing that last week, I had 3 consecutive losses, 3 super consecutive losses. Although one of them was avoidable, I was being very greedy. No, not very greedy, but I was just being too greedy. So looking at last week now, last week closed bullish. So this is part of where maybe trading might get dicey for some people sometimes. Just to digress, the market might, I'm not saying this is what the market will do, open in a way, come down, and go back up, tap into this imbalance, and then continue back up. Now, someone else on the daily time frame would think that this right here is a break of structure to the downside to continue to go down, forgetting that actually the daily broke structure to come and tap into a weekly imbalance so we can continue back to the upside. I don't know if that is giving clarity to anyone, but I'm saying so because I've once been in that pool of confusion before. You feel like, but 4 hour break structure now, it's not one shot. You won't see so many things until you go to the higher time frame, then you see what you missed out on. Either ways, that's on the side. Let us make progress. So looking at daily time frame now, daily time frame closed bullish. What do we mean by that? This was clearly a break of structure to the upside over here, clearly on the daily time frame. And then what did the markets do? You can see that the markets clearly has come to tap into what? Into that order block. So the market has tapped into the order block, and since the market has tapped into the order block, actually this high should be the next point of liquidity. There's what we call draw on liquidity in the markets. I can't start teaching on that now, but as far as the market is concerned, you should know where the market should head to next. And when you look at all this now, these are trend line liquidity. All things being equal, all of them should go. All things being equal, take note of my choice of word. All of them should go. So meaning that prior to everything that we have down here before, this is just we trying to be flexible. It's not confusing. We are trying to, there's a difference between being flexible and then having too many information that ends up being confusing. So fact is that first off is that it is clearly established that both on the weekly and on the daily, we are bearish and bullish. Pardon me. And remember that what I said about seeing a bearish opportunity, I wasn't affirmative about it. I was only saying that since we know that the market moves, it expands, it retraces, it expands, it retraces. And we've seen the weekly expanding so far. So meaning that ideally, all things being equal, at some point, I'm not saying this week, we should expect some retracement. So it could be this week. And meaning that when the weekly wants to retrace, it could be a full trend on the 4 hour and maybe even on the daily. So if we get the opportunity to join it, we shouldn't miss it. Because looking from the daily time frame now, fact is that we are bullish but the daily also closed within a range. Are we together? What do I mean by that? Look at this Friday's candle. It closed below the previous higher high. Are we together? I believe that is making sense to everyone. If it were to be that we closed above it, we could have easily said that. So let's assume that maybe we had this white candle, coming to close above like this. We could have easily said that, okay, maybe what we should also look forward to in the next week is that the market can just come, tap into this other block, and then what do we do? From there, as soon as the market comes to tap into the other block, we may most likely just continue from there. But the fact is that Friday closed within a range. So what is our primary structure or trend direction? It is bullish. Looking from the daily time frame, where is or are our range this time around? This will be the top range. This liquidity point for the weekly will now be our down range for the daily, because the daily is also giving us a different and clearer perspective. We are trying not to be too rigid. Remember what I said. So meaning that, what should we expect coming into this new week with all these plenty things that we've said? What is that one thing that we can actually hold on to with confidence, in quotes, as we come on? Zoom said we are running out of time. Let me rush so that we can be through this. What's going on? I want to delete a couple of things, but they're not deleting. Okay, so going into this week now, we can see that the daily is still bullish. And remember what I said about even the weekly earlier, that even if the weekly wants to retrace, the daily we have to break structure first. That's the fact. The markets can't just retrace all of a sudden. So meaning that in a way, although the weekly is bullish and we may perhaps be expecting a retracement, it still makes all the sense to respect the bullish direction on the daily time frame. So what will I do? On Monday, I'll be waiting for two things. What are the two things that I am waiting for? Most likely, I'll be expecting a new expansion to then close to this upside. Then that will do one thing for me, confirm the daily bullishness. So the next thing I will most likely wait for is a retracement into this other block, or taking out this liquidity. Like, that's one of two scenarios that I'm assuming that, those who are my like those who I teach personally should understand. So our markets can come for this internal liquidity, take that, and then we still move to the upside. These are one of two possible scenarios. So the market breaks to the upside, then we expect the retracement into this other block, we continue up, or the market actually still breaks to this upside but comes for this place as internal liquidity before we then continue to the upside. Remember what I said earlier, this is the only statement I can always make in the market with my full chest, and I can always bet on it. And what's the statement? The market never moves unless it has taken liquidity. So meaning that if this daily order block we hold after this breakout, the market will actually create for us the liquidity that will be swept inside this place. And who knows, the liquidity may have been created on the 4 hours already. Yeah, so as you can see, there are stacks of liquidity. All these lows are liquidity. So these are two major possible scenarios that we are looking up to as we are stepping into the new week. Or this is scenario number one. Let me copy this image and then I can send it to you. Hold on for me. Yeah, let me just paste it here. Please hold on for me. Please can paste it. Okay, either ways, let's just hide this one. I would screenshot it and say. So that's number one. For our primary trend direction, bullish. In a way too, we can actually have a situation whereby the market comes down, takes this low. So what I'm saying is the market literally opens this new week, come for this low, and then we continue to the upside. Primarily, we are facing the direction. Don't assume that the market will sell until it starts selling. Are we together? Those are one of the mistakes that I've made in the past. And maybe that's why I'm just emphasizing on. Don't assume the market will sell. Don't assume this is the week that the market will retrace. All that I said earlier is just to keep an open mind, meaning that as we are looking forward to buy, we are not ignorant of the fact that the market may do something different entirely this week. But until the market starts to do that different thing, don't assume that that is what the market wants to do. So having established that these are the three possible scenarios we can have this week, and that's our expectation on Euro USD following the simple checklist that we deal with. So that's it. That's weekly outlook, guys. So basically, the only thing we have to do now is sit down, wait for the market to open, and then give us one of the possible three scenarios we've projected. And then the moment the market does that, I'm assuming we know how to engage already. So take, for example, since this is a daily time frame, if this is the internal liquidity, I'll go straight to the 2-hour. If the market should play according to this scenario, I'll go straight to the 2-hour. What am I expecting on the 2-hour? So on the 2-hour now, I'll be expecting the sweep of this liquidity, a minor break of structure to the upside, and then most likely I enter on a retest, and then I join to the upside. That's how I was able to get in on a particular trade. Yeah, this one. I mean, it's just that super simple, yeah. So let me hide this. I'm basically talking about how to now confirm our entries, yeah. So let me hide this. Okay, so clearly it was obvious that on the 4-hour time frame, because like I said from the beginning of the video, I don't pick my trend directions from anything less than 4-hour, most especially within the week. But when we are starting the week, I start from the week. So clearly this is an imbalance and several liquidity that the market has taken. The market taps into the imbalance by clearing all this liquidity. So I went straight down to the 1-hour. Mind you, this trade that is currently in profit ended up a loss for me. Let me look for the screenshot so that I'm not one trader who minds reality. Yeah, so my network is loading. Okay, yeah, so you can see it. You can see where I kept my stop loss, 1.13420. Let's try editing this price. 1.134, 1.13420. So as you can see, the market sniped my SL and began to go in my direction. It was super painful. I felt like crying, but I said, well, that's me and my maybe greed, because ideally this is where my stop loss is meant to be, following structure and highest point of invalidation. But either ways, why did I take the trade? Now let's hide this. So that liquidity has been swept, right? When we check the 1-hour time frame, you can see we had this break of structure to the upside very clearly here, right? It's just that simple. So we had that break of structure to the upside there, and then I was expecting, I had my entry. I can't remember where I had the entry, but I think I showed it to you guys already. So I think I had my entry there, and then my stop loss was where it is. I felt like crying because it's a different case. I mean, no matter how disciplined you are in these markets, nobody still wants to lose at the end of the day. What we've just learned to do is to manage our emotions, yeah? That your emotions don't get the best of you. And like I said earlier too, this is where my TP was actually, because these are liquidity points. Like, trust me, they are too sweet. If the market does not take them this week, it will come back for them very soon. Trust me, all these things, the market should pick them out. So that's where my TP was. But then obviously, as you can see, the market actually took me out last week. I wasn't trying to force it. So long story short, when we have our projection for the week, let me see if I can bring back some of those things. Okay, yeah, so that's them, or those are them. So from the daily time frame, if the market should give us any of all the scenarios we are looking for, the most important thing is to know the liquidity the market wants to sweep before it begins to move towards where it wants to move to. Having identified that the market sweeps it, you check your lower time frame, 1 hour. You can see here I don't go below 15 minutes, and it's rare sometimes, like super rare. So I go to my lower time frame. I go to 15 minutes and 30 minutes when I'm picking my trend direction from the 4 hour. When I'm picking it from the daily, I don't go less than 1 hour. So that's that, guys. That's the outlook for the week with Euro USD, the asset I trade primarily. So does anyone have any assets you want us to check? If the answer is yes, then we can most likely end this session and then create a new Zoom link because we have less than 1 minute for this. Is there a question or is there any asset anyone would like us to look into? If there's none, we just call it a wrap. All right, this thing has less than 1 minute, so I'm assuming our silence means no. So it was nice having you guys come on board. For everyone who is here, I think I can see everyone. The only person I think I don't know is Ted DY. So send me a message on WhatsApp so I can forward the recordings to you. Cheers, guys. Have a very profitable week ahead.